Welcome to the MENA Surge podcast, the ultimate source for all things Web3 and FinTech related in the MENA region. Powered by FinTech Surge and Future Blockchain Summit, taking place at Dubai Harbour, October 15th through 18th, alongside Expand North Star and in association with GITEX Global. I'm happy to be joined by our partners today from Cointelegraph MENA.
Cointelegraph is the leading Web3 publication covering all the latest trends in blockchain, Web3, and FinTech for the region. Hi everyone, it's Dr. Nishata Satsev here from Cointelegraph MENA. Today I'm with Crypto Birb. So let's start with you. How did you start Crypto Birb? Why? What did you have in mind? Did you know that you were going to blow up like this?
If I'd known that, I would probably try to do better, right? So there's always this uncertainty, I guess. Any decision that we make, from the financial standpoint, from any sort of like a standpoint, is at the time of making any decision, the uncertainty is at the peak, right? So we always kind of like naturally would feel something that is also in finance and in real life called loss aversion, right? We would hate losing, so which is why we also often try not to follow through on our decisions. So I guess it was a little bit of a spontaneous point from my side, from my history in 2017, that I really pulled the trigger, and decided to start developing a brand, for crypto. The history, however, goes back as early as 2013, if I remember correctly. However, my memory is really foggy. I have a memory of a squirrel. So my grandfather, used to bet with Bitcoins on the football matches. And he's a very tech-savvy guy.
Really?
He did finish this engineering studies in the computation in the computers, which right now in his 80s, was a pretty spectacular achievement. I would argue, for his being 70 or so, and knowing about Bitcoin, knowing about like this entire utility to it, and he also was a trader. Every time. I would just visit in his room. He was pretty much locked up in this, call it room, cage, whatever, basement, and he would stare at the black screens with those white kind of like movements on the tickers, and I was like, why would he do that? Why would he do that really as a trader? Why would he sit locked up in his own room for all the time, and just would not leave, right? And that's how I basically approached trading for the first time, right? So I understood, okay, he was trading. At the same time, that was not necessarily the most successful job of his career, I would argue, right? This blew up a lot of money. So the rest of the family was not necessarily happy with that. However, he's a great man, and definitely so much I can look up to his wisdom. So having this early, I would argue in my, 20 years, right? I was 20 years at the time. First encounter, that I did for trading, that I had for trading, was with his observing what he was doing. I wasn't really impressed, being completely fine and transparent about that, right? Because being locked up in a room is not necessarily promising, future path for the career. So I would try to ignore that and just move on with my studies, right? So I did the chemical technology studies. I'm a chemical engineer from my background.
Okay.
I did deal with the polymers, with the nanocomposites, with the graphene, with graphene oxides, and many different like substances.
Wow.
So I could probably not shut up. I'll be going on and on. So I just don't want to bore you to death with that. However, I did have this. Like I said, this uncertainty about the path and about the future, right? Because many friends of mine from the university, from the Warsaw School of University of Technology, a leading school for the engineers, was basically the decision that some of my friends, they graduated, they were PhDs, they really did a great job, and they had worked in some laboratories, for some time. However, the entire environment behind it, as in the educational side and how much funding there was going into it, decided and pivoted that lots of my friends who were engineers, really well qualified people, they would just go outside of the country for, UK obviously, for Germany, to work in grocery stores as engineers, right? Yeah. I was like, hold on, something is off. Something is not really working well, right? So I had this, like I said, this maybe a little bit of prejudice to it, right? I wouldn't really want myself to finish, to end up as a grocery store,
Especially
even
after studying so hard.
that's it, right?
Yeah.
So either it was the decision to work in a lab, with the chemicals, which is on its own, it could be fun. However, you smell a lot of different substances. It really, sets low in your lungs, and it really causes a lot of physical, I should say, hazards to it. And I decided, okay, what else can I do, right? What else can I do? I don't necessarily want to end like that, end up like that. So I basically began my second studies, right? I did the first master's with that on the polymers, and the second master's with the School of Economics, Top School of Economics in Poland. It was for the management. However, I ended up purposely, having the master thesis on the technical analysis of Bitcoin, right? Because in the meantime, I did get positively impacted, if you will, by technical analysis works, right? And eventually, this has become my major. This has become my, I would say, leading point of interest, and trying to master technical analysis skills in a very unpopular manner, right? Because most of the time you would hear and read about technical analysis, it's kind of like it's squiggly lines, it's some rectangles, some geometrical shapes, and it doesn't really have much substance to the markets. It's just forecasting a crystal ball, and it doesn't work, and so on. However, there is apparently an entire depth to it, and when you just go and try to kind of like, again, overcome this bad feeling about losses, about losing, and blaming the external factors, just like mistakenly done analysis of the market, you understand that there's the whole depth to it, right? There's a whole science to it. There's a scientific approach that is like some hypothesis testing. There is entire programming behind it. There's, of course, lots of strategy designing and this system designing. And apparently, the markets give us those infrequent moves that tend to persist, and they're called trends. And because of trends, technical analysis works, and those trends are what makes this whole world of finance non-random, right? So
really interesting. Wait, so you did your master's in economics,
yes,
and your thesis in trading.
That's it.
Wow. And is this thesis published anywhere?
Yeah.
Okay.
I believe I did manage to kind of like pull it, push it outside in English as well, right?
Yeah.
So it's a pretty good chapter. I was really lucky to study under the supervision of a very, very well known financial professor at the university.
Yeah.
And at the same time, like I said, technical analysis would have often this stigma from people who would underappreciated in terms of believing that the markets are random, that there is not much choice that you can make about the markets, that is just 50% up, 50% down, and you're just doing something about that. However, this entire existence of the trends, which is the keyword, I guess, makes it non-random, because those prices move up in one direction for a long time eventually. Same goes for the bear market. So there was some substance, that I got really inspired with to learn to develop. And basically that's how I am right now.
Really cool. Okay. So what tools do you use for trading now? Do you have your own? Have you developed it? Are you in the process?
Perfect question, Nish. So it's a process for sure, right? It's a process, mainly because the markets are not static, right? Nothing in the world is really static. Everything is dynamic, right? Impacted by different forces, but also lots of randomness all around us. So it's a constant battle of trying to beat the market, right? The job of a trader, of a technical trader, is to beat the market, right? Otherwise, something as simple as buying and holding strategy, which is what Warren Buffett did, for instance, holding it over decades, over years, is for some people, it can be a path to go, right? However, again, there's more depth to it, right? You can make it better. So your job as a trader is to generate this so-called alpha, which is this abnormal profit that you can make outside, and that is beating the buy and hold strategy, right? So it's a constant battle of adjusting to the markets, And all those fundamental twists, exogenous factors that just happen all the time, just like recently it happened, with the Fed's recent actions about the bank bailouts, which is a very interesting and hot topic. Pretty curious how it plays out. So all the time you do need to incorporate all those factors, into your trading. Otherwise, that the systems get outdated. The data changes, the markets change, the fundamental factors appear. Like I said, lots of regulatory aspects, can kick in and just change the way that the market looks immediately. So finding the systems, finding the strategies. Well, systems and strategies are a little bit different, right? Strategies are kind of like a main set of processes that takes you from point from point A to point B, as in well-defined goal, right? There's a rule as simple as SMART goals, right? That every goal will have to be specific, measurable, achievable, relevant, and time-bound, so that any strategy will make sense whatsoever. And putting that in financial frames, gets you the choice between, like I said, the buy and hold strategy. You can be a day trader. You can be basically a position trader, which is something that I am. You can be an intraday trader, right? As well, and trade like very micro movements.
Okay.
So
how do you feel about the strategy of just hodling?
Like I said, it's not necessarily a bad choice, right? In fact, most of the people would have done always better if they just buy and hold,
I feel like every time I trade, I buy high and sell low.
It happens. It happens. It happens to the best of us, Nothing wrong with that. Nothing wrong.
So what advice would you give to like new traders that are just exploring the space?
Good question.
Or to traders like me that are
The very
horrible
good
at it?
Very good traders, you mean. Very good traders.
The best.
The best. I don't know if you were aware, however, women traders are far better on average than men.
Really?
Yeah, they are. They really are, on average. Women would have this excellent capacity and capability of managing the emotions so much better than men, right? Men would always be like, these fierce wild guys, and then trying to prove themselves to the world outside and just beat, the adrenaline, feel this need, for kick, for speed, and that's fairly distant to the women side of the market, and women are fairly better traders on average, right?
Interesting.
It's you are probably the very good proof for that.
Should probably start trading. So, how would you recommend that new entrants do their research? Is it going out and finding articles? Is it following, influencers? And on that topic, do you feel like influencers have to be held responsible to a certain extent for the advice that they give as well?
I think that's a very interesting and broad question, Nisha.
Yeah.
And I'll try to address that as simply as I can. And if I ramble, just excuse me. There are lots of biases and prejudice that we have as people, as traders. And one of those is named self-attribution. Self-attribution bias, which basically drives a lot of markets. All those biases, those psychological deviations that we have against the theoretical decisions and ideal situations is driving us away from our plans, right? It's driving us away from our goals and making us act irrational, especially when we face uncertainty. So such biases, emotional biases especially, which are hard to control, because, the biases would be divided into two categories, right? You could be cognitive about your biases that you can try and master, such as basically lack of knowledge in a specific, field, or poor memory that you can practice, right? Or just pattern recognition skills that you can practice. And there's an other side to it, which is an emotional. An emotion is by definition spontaneous, right? You cannot basically order yourself or request yourself to feel a given specific emotion at one specific time in the future. So it often arrives spontaneously, that's why it's hard to manage that, right? You can only kind of like manage it once it comes.
Okay.
So fighting the biases, learning about them is a step one, right? This helps you, of course, understand yourself better as a trader, as a human being, and if you really do the study, if you really commit to it, you see all your prejudice, you see all your biases, you see all of those deviations that make you act irrationally, and the more you are aware of it, the more you can just improve that. And back to the self-attribution, is that we would try to attribute the best success to our genius, to our to ourselves, right? At the same time, anything that's just a failure that would just have to admit our losses is the exogenous kind of like a fault. It's external. We would put it on the, on the bad weather, on the mood. We would put it on the politicians, on the influencers, right? Yeah. So every time somebody would win with an influencer for the money, for earning the money, they would be happy. They would cheer them up. They would glorify them. They would be very, very cheerful about that. And at the same time, on the next day, when there's just a little bit of a downtick, 0.1% of a down move, they would not search the blame in themselves. They would search the blame on the influencers and on the external factors, on the scientists, on the politicians, on the TV, on the forecasts, on the weather, on their dog, on their family. And it could go on and on, So I would argue that putting or learning about the biases from the step one and understanding that, well, there is a whole grief cycle process that takes you from the denial, from this cognitive dissonance that you have to fight, that just conflicts your views, to reach the whole, stage of acceptance for what you are surrounded by, for this new situation, and accepting that. At times I try to be a religious guy, so praying helps me that gets there, for instance, right? Learning about acceptance for your own faults, understanding that the losses are inevitable, that our ego is going to be harmed, and that all the ego defensive processes, mechanisms would have to be overcome, right? Yeah. That is the whole door that just opens up a new chapter once you get through the door. That gives you a deeper understanding for what's going on behind the markets.
Really interesting. It sounds like you take quite a and analytical approach towards trading, which you normally don't hear. I mean, you hear about like the different theories, the Fibonacci number gets thrown in somehow everywhere. Right. But it really sounds like you've broken this down into human psychology almost. So
you're right.
It's an interesting aspect here. So I want to know what your insights are for 2023. What do you feel are going to be the biggest trends for the industry?
Good question, and when I think of 2023, I do think in a very positive manner. And there are lots of reasons for that. So myself being the CMT, Chartered Market Technician, the only title holder in my country, basically, for explaining technical analysis with lots of psychological understanding to it in depth. I would argue that there's a lot of behavioral patterns that just repeat and retain over the years. And one of such is seasonality pattern. Seasonality, which is a very interesting phenomenon that is often seen in the markets, that is often driven by external factors such as weather, right? There is a season all around the world, seasons of weather, and they drive up the markets very often in terms of the food market, the crops, the wheat, oat, and so on. So accounting for the seasonality from the natural point of view, there is a second view and angle to it, which is driven by presidential cycles. This 4-year presidential cycle that, is coming from US mostly, and that is impacting all of the other markets, basically when there is the free market connection between them. I would argue that both together, aggregated, would cause this total and cumulative seasonal pattern, right? And over 84 years, for instance, only 1 year was losing if it regards pre-election years. And 2023 happens to be a pre-election year, such as 2019. And as a matter of fact, the midterm years, which is the last year and 2018, are the bearish terms typically, right? So those are the years that typically would bring the bear market or the bear market extension or a lot of sideways movement, which otherwise is not bullish. So speaking of the records from over not 5 days, not a week, not a month, but 84 years or decades or almost centuries, such as technical analysis studies would be proven like that. This makes you wonder, right? If there is certain repetition to it, and just as I use this parallel for the weather at times, if you know that in Dubai, the temperatures during the summer is going to be 40, 50 degrees, then that's been the tendency over the past years, decades, and even centuries and so on. What are the chances that the temperature is going to go negative during the summer?
Almost zero.
Almost zero, right? Of course you don't know the future. We don't know what's going to happen, right? There is this uncertainty to it. However, because there's been this phenomenon that's been driven, for many decades, for many years. It makes you think that this probabilistic aspect to it, and that the frequency of events, of happenings, would speak in favor of continuation of certain pattern, such as the pre-election years. So over the 84 years, only 1 year was losing, and we're talking about the data set from the Second World War,
Okay.
And 2023 happens to be one of those bullish years.
So a lot of people would argue, though, that the Bitcoin chart also changes what it's, what it reflects on. So sometimes it could be gold, sometimes real estate, sometimes stock market. So would you say that that makes it more unpredictable, though?
What do you mean by unpredictable?
In terms of, okay, you have the trends, that, like you said, the pre-election years are usually bullish. But now what about, the stock market collapse or external factors that come in? How can traders navigate the industry with all of these external factors playing such a big role in the way that the chart moves?
Wouldn't it be cool to have some sort of like a rule that the market would always turn up when the market goes down on the other side? Yeah, it would be very, very beneficial to have such very framed rules and a very guidelines, to follow. However, because of the dynamics, because of this unpredictability, which you're right about, it makes it irrelevant. There are no rules. Markets are chaotic. There's a lot of entropy in the market. That is this, inherent chaos that is just making the markets turn, regardless of what the trends are, right? So there's always this little bit of uncertainty, and even if we are certain about something, right? Like I said, those seasonal patterns of the weather, there's just a tiny bit of seasonality and unpredictability that we should factor into that, right? So this randomness at times just appears, and there's this butterfly effect, this snowball effect and even that is, well, if you will, what happened in Wuhan, some time ago, it did arise to something big and global.
Yeah.
And no charts are going to tell you about that, And in hindsight, of course, everything is, obvious, right? That's also a trap of our mind. That's also this fake feeling of overconfidence that is built within us if we think that the market was predictable. However, they are not. The markets are very unpredictable. And our job as traders is just try to track those behavioral patterns, is try to track those risk control techniques that we can do with technical analysis in order to not expose ourselves too much to risk whenever the conditions are not good, and just maybe push a little bit further and higher in terms of the aggression, in terms of the position size when the odds are in your favor. Right, so I would argue that just having this probabilistic aspect to it, right? Understanding that everything is a probability. There are no guarantees. The only guarantee is, in fact, that we are going to have losses, right? That we as traders, we really have to work hard to generate profits. However, we don't have to try at all to have losses.
Yeah,
the losses would always come, right? Whatever we do, because of this unpredictability, right? So I guess there's a lot of, like I said, psychological aspect to it and behavioral aspect to it for understanding that our ego is going to be harmed, that all those ego defensive mechanisms and biases and prejudice, factors are need to be tackled, need to be solved and addressed. And when you combine this with data, with statistics that, again, are just not random, not over a small sample, but they include the sample over hundreds of years. Technical analysis goes back in 212 years back in the past in terms of something that is called momentum investing strategy, right? And the momentum investing, which is basically long strength and short weakness, which means exposing yourself to what really works well and decomposing your portfolio away from something that doesn't work well, that's been existing since very, very old times, And our job as technical analysts, as market technicians, is to utilize that in our favor. And that's it.
Okay, interesting. So I want to wrap this up by, I guess, a little recap on what's happened in the last year and, where you see the industry going in terms of DeFi. So obviously over the last year, we've seen the collapse of several massive centralized institutions. I want to know how you feel DeFi can have an impact, or vice versa. How does this impact DeFi?
That's a good question. For regards DeFi, this is a little bit of of a narrative, that we have that just opposes the corrupted politicians, if I were to address it this way. We really have a good cause for what's going on right now. Good example, good case with the bank bailouts, right, with the United States. And those bank bailouts basically prove that the financial system as a whole is not in good condition, right? For instance, this is a very interesting point, right? Yesterday, Credit Suisse, one of the biggest banks in Europe, basically, was 30% down on a day before they halted trading. The entire financial system right now, the banking sector, is at the really edge of a collapse. It does seem so. And, it might have been known for ages that it's not really in the perfect condition, right? However, of course, with the money inflow, with the monetary printing, with the monetary easing, the money supply increasing basically makes you think that for some time it's okay, that it's good, because eventually you earn more, the prices are also higher. However, if you earn more on the paper, then it means you're richer, right? However, real yields, real earnings, inflation adjusted, keep declining.
Yeah.
They do keep declining, right? So DeFi as a whole, just is a little bit of insurance from the foundational point of view, from the fundamental point of view, to address the inefficiencies of the regular financial system, right? And the regular financial services, because seeing Credit Suisse just dropping 30% on the day, the banks like, SVB collapsing, like I said, and getting bailed out by a sudden rotation in the monetary policy potentially from the Fed, just is not optimistic as its own, I would say. So the conditions are really tough in those regards, which gives at the same time an opportunity in a different place, right, elsewhere. And I'm really glad that you brought DeFi, right? And DeFi seems to be the spot overall, right? This whole chapter, this whole group for cryptocurrencies, for tokens, I would say that it may have a lot of relevance, right? And especially when there is this flight to safety, right? In terms of the bonds, there's a lot of risk that just keeps piling up. Speaking of which, credit swaps, for instance, as in the bank insurance, the insurance that the banks, will collapse, the prices are spiking, and they really went through the roof just yesterday, tackling over 1,000% greater rates than during the time of the Lehman Brothers collapse in 2008, right? So there's a lot of risk, a lot of pressures from the investors themselves and from the entire system as a whole, not to just get blown up, which brings this opportunity potentially, towards DeFi. So I would argue that having this positive seasonality, right, those narrative-driven trends often, those seasonal trends, do seem to have and put a lot of hope for DeFi for 2023 and for 2024. I would personally, expose myself to DeFi more when the market is well settled after it has advanced already a lot, right? Because those, from the liquidity standpoint, Bitcoin and Ethereum still the main coins, the main popular cryptocurrencies, are what attracts the liquidity, right? So exposing oneself to a lot of illiquid assets often. The DeFi, lots of DeFi tokens protocols are still kind of like just small compared to Bitcoin. It puts you in the risk, right? So I would argue the narrative is good on its own. However, the timing might be just a little bit off or just not ready for it, right? So if I were to give any sort of like insight about DeFi more specifically, I would argue that towards the end of the year, the importance of that will increase, and at the same time, probably the prices will follow. So probably towards the end of the year, the bet for DeFi and on DeFi is going to be a better choice than it will be right now and ahead of the summer, which is a little bit of a declining on its own for the quarter. However, there is a lot of potential, like I said, from the fundamental standpoint, from this overall systematic viewpoint. I would say that this bank bailouts, that this entire instability that's just emerged very aggressively and spiking up everywhere, this may add a lot of relevance and substance to DeFi as a whole, right? Giving this fundamental push to it, moving lots of capital to it.
So, Adrian, thank you so much for sharing your insight. I love the psychological aspect that you took to trading. I don't think I've heard too much of that before. Now, really quick, I want to do a rapid fire, and I just want like one-liners. So, I want to know, what are the most upcoming trends that you see in 2023?
Very good. I would say GameFi, Metaverse is definitely something that is on the traction, on the record, as well as NFTs, right? Especially if you combine all of these, there is a lot of space and a lot of money that is just moving in this direction.
What advice would you give to budding entrepreneurs that are looking to enter the space?
I would say that this persistence and understanding of the seasonal patterns and on the trends, and understanding to work out with this persistence in the market, making yourself comfortable around the competition is what it does really require.
Okay, and what are you looking forward to at Future Blockchain Summit?
I love Future Blockchain Summit. I spent so much time with the people, with the organizers, and I had very good memories with that. I'd love to come back and love to get back on the stage. I love speaking, so hopefully I see everybody there.
Awesome. Okay, well, thank you so much.
Thank you so much, Nish.